Years back, late Mr. Dinesh Kothari started a firm in the name of Messrs. Kothari and Company to provide tax and allied laws advisory services. Later in the year 2001, the activities of the firm got expanded into a corporate entity in the form of Ashutosh Financial Services Private Limited. Over these years, the company has emerged as a prominent player in the field of finance and taxation. The company operates with a quality management system certification of ISO 9001:2015 and is now a complete financial services solutions enterprise. Ashutosh Financial Services Private Limited is presently serving through its 4 different divisions, namely Ashutosh Investment Services, Ashutosh Insurance Services, Kothari and Company, Ashutosh NRI Services. Ashutosh Investment Advisory, which is in the activity of connecting people with investment opportunities like mutual funds and portfolio management services, bonds and fixed deposits, investment in alternative investment funds, and investment in foreign equity. Ashutosh Insurance Services provides insurance solutions for life insurance, health insurance, general insurance, and retirement and pension planning needs. Kothari and Company works as a solution house for income tax planning and its compliance, estate planning, and advisory related to inheritance laws and preparation of wills. Ashutosh NRI Services is a one-stop solution for NRIs to address the needs of investment services and its management in India, tax planning and its compliance for Indian income tax, advisory related to FEMA and RBI regulations, and complete support for compliances related to foreign tax laws. Our company is a unique setup which is truly a one-stop solution for all the financial and taxation needs of the client. The company enjoys a state-of-the-art infrastructure facility having its office in the middle of Rajkot city, spread across 4,000 square feet area consisting of separate setup for each division. The company has a fine mix of personnel from financial and legal background like chartered accountants, lawyers, certified financial planner, and management graduates to form a dedicated team of skilled and qualified staff. The team works under the dynamic leadership of Mr. Daxesh Kothari, who is the MD and CEO, and the other directors of the company. All the divisions and departments manage their operations with high-tech versatile softwares, and the entire IT infrastructure is connected with integrated file server for seamless exchange of data with security and regular data backup facility. The company has a fully equipped conference room with projection and video conferencing facilities, which makes dissemination of knowledge, information, and interaction convenient. The company has its regional office at Ahmedabad, which is the emerging metropolitan city of Gujarat, to facilitate the clients. The company website www.ashutoshfinserv.com and mobile application Ashutosh Finserv gives an overview of the happenings in the world of finance and also a useful client user interface. We operate multiple investment management softwares for managing our clients' investments, having interface with our website and mobile app. With the help of our website reporting software and app, our clients can carry out complete paperless investment transactions and can have access to their investment portfolio on real-time basis. We regularly update our client with latest happenings from the world of finance and taxation through digital mode of interactions using YouTube videos, WhatsApp broadcasting, and sharing the updates on social media, that is Facebook, Instagram, and LinkedIn. The company has been conducting presentation on analysis of the Union Budget since last 15 years and is also arranging presentations for various sectors of economy and society by covering topics of vital importance related to finance, taxation and estate planning. The company serves to more than 2,000 satisfied clients spread across the world and is actively maintaining business relations with many clients and groups for more than 60 years. Ashutosh Financial Services Private Limited is growing as a complete financial solutions enterprise with its presence felt not only in India but also globally.
We will begin today's event by an introductory video of today's speaker, Mr. Daxesh Kothari, after which we will proceed towards the core presentation. Post the presentation, we have a question-answer session to address your queries. You can post your questions in the comments section below, which can be entertained later. So, without taking much of your precious time, let us move forward towards today's event.
Mr. Daxesh Kothari is a tax and financial consultant and the Managing Director and CEO of Ashutosh Financial Services Private Limited, which is an ISO 9001-2015 certified company with prominent presence in the field of financial services. He specializes in the fields of income tax, FEMA, trust laws, estate planning and foreign tax compliances. On the financial front, he specializes in investment advisory and insurance advisory. He advises companies, trusts, high net worth individuals, and non-resident Indians across the globe on financial and tax and allied laws related matters. He is the director of Ashutosh Rubber Private Limited, which is a nationally acclaimed manufacturer of rubber and TPE products and a group company of Ashutosh Financial Services Private Limited. He is a trustee of various charitable trusts. He has been involved with a number of social service projects of Rotary Club and is a Paul Harris Fellow of Rotary International. He has been presenting analysis on the Union budget since last 15 years and also on various subjects of taxation and finance at various forums addressing doctors, businessmen, industrialists, taxation consultants, chartered accountants, company secretaries, NRI and postgraduate students of diverse branches on subjects related to finance, taxation and estate planning to make our society financially literate. His articles on financial subjects are regularly published in renowned newspapers like the Economic Times, Mint, etc. and also in magazines like Dalal Street. His interview was aired on ET Now as a mutual fund industry expert in the program named Swatantra, which is one of the most acclaimed investor education initiative of our country. He has also addressed a program dedicated to NRI on a leading Gujarati TV channel in Ahmedabad. He is a 360-degree versatile personality in the fields of taxation and finance, which makes him a unique and a truly a one-stop solution provider for a wide range of financial and tax-related matters.
Hello, good evening everybody. In the opening remarks it was said that young people are interested in participating in grappling the opportunity of investing in foreign equity. I would say that it's not just young people by age, but young by thoughts also these days think of investing in foreign equities. When it comes to investing in foreign equities, there are so many things which come up in the mind. And what I have seen is that whenever we talk to somebody, whenever we try to figure out as to how should I go ahead, what are the advantages, what are the regulations, what are the tax aspects of it, then we get information in bits and pieces. So what we have done today is that we have tried to cover this topic absolutely 360-degree, wherein I would be talking as to what are the advantages or what is the rationale of investing into foreign equities in the first place. Then we would be talking as to what are the different options that are available when we want to participate in investing into foreign equities. Thereafter, we'll look into that what are the regulatory aspects when somebody is investing, whether somebody is a resident or somebody is a non-resident, what are the regulatory aspects which are involved. Then we'll also look into what are the tax aspects for residents as well for the non-residents. So it will be, as I said, a complete 360-degree perspective on investment opportunities in foreign equity. So the first and foremost thing which comes up in anybody's mind is that why invest in foreign markets? So that's the first thing that we need to address when we are trying to look at this avenue. Now, the first and foremost thing is that by investing in foreign market, we participate in the investment in the best of the global corporations. The largest and the most renowned corporations are there in the world. As far as India is concerned, most of the companies, by and large, so many of the companies which have developed to cater either to the Indian markets or acting as a service provider to foreign countries. There are very few or very negligible truly global players who cater to global markets completely. Hence, there are very few equivalents of such large and most renowned companies. Today we are dependent upon, when it comes to say electronics, shopping, social media, so many things, we are dependent upon foreign brands. And we consume, we contribute, we participate in all these foreign brands by contributing to the revenue, but unfortunately, we do not invest into those companies. Then one more thing insofar as Indian investments are concerned is that there are country-specific risks. If all my investments insofar as equity is concerned is in India, then I'm exposed to political issues which say crop up, bad monsoons, a border tension, oil prices, or for that matter even the commodity prices, the exchange rate, and so many things which go on developing which impact India as such. There are issues where, say, maybe the Indian economy is slowing at times, or it is not, we are not able to take the advantage of the global favorable trends in comparison to India. So diversifying across markets makes really good sense. Now this shows a clear-cut rationale or a reasoning as to why we should be participating in foreign markets. When it comes to the biggest markets, US today is the biggest market on 2018 GDP statistics. USA was the biggest contributor in the economy in terms of volume, in terms of the amount of participation it had in the economy. While as in last 10 years on an average, India has been one of the fastest growing economies in the world. So when we invest into foreign markets and India, we would be simultaneously participating in not just the world's largest economy, but also the world's fastest growing economy simultaneously. Then one of the very important aspects or one of the very important advantages of investing into foreign markets is that most of the investments, and especially the ones which we are going to discuss today, are US dollar denominated. When the investments are US dollar denominated, the depreciation of the Indian rupee, or if I might say that the appreciation of the US dollar adds up to my return. So, in the statistics which I have been showing is from July 2014 to July 2020, the kind of depreciation which has happened to the Indian rupee is 3.61% per annum on a compounded basis. So even if the foreign markets, which are the US dollar denominated markets, if they remain at the same level, there is no appreciation, but for the simple reason that US dollar has appreciated, my return of 3.61% in last 6 years is something which is assured. So this US dollar denominated exposure acts as a great advantage. Now we look into as to how has the S&P 500 grown in US dollar terms and Indian rupee terms. When we look at S&P 500 in the last say 15 years, it has grown by 3.6 times in US dollar terms, but in Indian rupees, because of the depreciation of the Indian rupee, it has grown by 5.9 times, practically double the growth on account of the depreciation of the Indian rupee. Some of the years, say 2011, if we see that the S&P 500 US dollar, the appreciation was 2.211%. It was just a 2% return on the S&P 500, while as when you look at the appreciation of the S&P 500 itself, in Indian rupee terms, the appreciation was whopping 21.16%. So the difference of 19.05% which occurred in 2011 between the appreciation of S&P 500 in dollar terms and S&P 500 in rupee terms was on account of the depreciation of the Indian rupee. Thereafter, in 2013, it was the same situation where the Indian rupee depreciated in that particular year on a very substantial scale. After 2014 until 2020, then the extent of depreciation is quite contained and it is within a band. But the fact remains that there is still a depreciation of the Indian rupee which acts to the advantage. The same is the scenario when we compare the returns of Nasdaq 100. Nasdaq is a benchmark of the technology driven companies of the US, where the Nasdaq 100 grew by 6.4 times in US dollar terms, and the same Nasdaq 100 in 15 years, last 15 years, has grown by 10.4 times in Indian rupee terms. Then the another aspect why we should be looking at the foreign markets is the attractive valuations. Now here what we have done is that we have tried to compare the Indian companies and its comparables, or companies, let's not say comparables, but the companies which are more or less in the same businesses. When we compare each one of them, the kind of valuations, the price earning multiple, by price earning multiple, as we know, what means is that price of the stock divided by the earnings per share. That is the kind of valuation which is something which is being looked at when we look at what is the pricing, or what is the kind of valuation which has been ascribed to a particular stock. So when we compare these valuations, the Indian counterpart, say we take the Avenue Supermarkets Limited, which is the DMart of India, the price earning ratio, the P ratio is 130, while that of Walmart, which is times and times bigger, which is so powerful, so big, so profitable, and since in this business of retailing since years and years together, is at 24.68%. Then we look at further companies into similar businesses and we compare the Indian counterparts with their US counterparts. Then we end up with the same scenario. Say we take the case of Reliance. Reliance is today a conglomerate of 3 businesses. So we have compared it with 3 different kinds of leaders in the respective fields. They are into oil and refining. So we have compared it with Saudi Aramco. Then they are into Geo, which is where we have compared it with the Facebook, or they are also into retailing where we have compared it with the Walmart. In all these 3 cases, the kind of price earning multiples which those global leaders hold and the kind of valuations which Reliance Industries hold, there is a sharp contrast between the two. Having said this, I definitely do not mean that the valuations or the valuation multiple which have been ascribed to the Indian companies are incorrect or they are highly overvalued. No, this is something which definitely happens when a company is operating in a growing economy. When a company is operating in a growing economy, the earning multiples factor the growth prospects, the speed of growth which that company the company can take up in times to come. So normally in emerging markets, the extent of price earning multiple is always on a higher side. But having said this also, what I would say is that the valuation multiples of these foreign counterparts are also quite attractive. Then if we compare the returns on the US benchmark indices and the Indian benchmark indices, then we'll be able to understand that the performance of the US market in say maybe last 1 year, if we look, the Indian benchmarks have been in last 1 year, they are minus 11% around, while as the S&P 500 in Indian rupee terms is up by 15.8%, and the Nasdaq, which is the benchmark of the technology driven stocks, is up by 43.7%. Now this is the kind of picture or the similar picture when it comes to all the different time frames and even 15 years. Right? In 15 years, if we look at the return on Nasdaq is say 18%. These are, I'm talking of compounded annual growth rates. So Nasdaq has delivered a return of 18.9% since last 15 years on a compounded basis, while as the Nifty 50 has delivered 12.2 times. So it makes good sense in terms of the kind of returns which the US offers today vis-a-vis in comparison to India. Then when somebody invests into foreign currencies or foreign markets, then naturally they create a corpus for foreign currency expenditures because the investments are into foreign currencies, and hence what happens is that if they are contemplating any expenditure for foreign education, say maybe international travels or settling abroad or immigration or for that matter anything, then there is a ready corpus of foreign currency which is available at all points of time. Then one more reason for somebody to invest in foreign markets is the kind of dividend yields which the foreign markets offer are at times better than what is being offered by the Indian markets. So what happens is that because the valuations, the P multiples are on a higher side, naturally when the stocks are expensive, when there is an income in terms of any dividends, then that income is definitely on the lower side because the value of those stocks are higher. While as when it comes to countries where the valuation of the stock is little on the lower side, the dividend yield which is to the investor is on the better side. The average dividend yield on an S&P 500 is around 2%, and when we compare it with Nifty 50, it is around 1.42% in last 10 years. So when I invest some money into S&P 500, then against my investment, I can on an average, or I have earned on an average a return of 2% on my invested amount by way of dividends, whilst in the case of Nifty 50, I have earned 1.42% against whatever I have invested in the stock market by buying stocks at today's prices. Then one more feature when somebody is investing into foreign markets is that when we talk of US, the prices of certain stocks, maybe a Berkshire Hathaway or a Google or that is Alphabet or those kinds of stocks is quite high. So what facility or what advantage which is available is that I might not buy one full share, but I can buy a fraction of those shares and still participate in the investment into those companies, which are something which I am very much fascinated about. And through investing into all these things by the investment platforms which I am going to talk in detail, we'll be able to invest even in fraction of the shares. Then if somebody is investing into foreign mutual funds or ETFs, then the things are much convenient and flexible, that the investment would be in Indian rupees. There would not be any special transaction costs which would be involved. Investment formalities are quite simple, and even when we invest, we might not buy stocks directly of different companies, but when we invest through maybe a benchmark, which we call as passive investing, even that is something which is very worthwhile. And in long runs, as it is said in US, there are very few fund managers who have been able to beat these benchmarks. So passive investing is also something which somebody can look at by participating through the mutual fund route or the ETF route. If we talk about tax advantages while investing into foreign markets, most of the countries, and India especially, has got double taxation avoidance agreements with US and other countries where somebody might be thinking of investing. So while we invest into those countries, we get a concessional rate of taxation of say maybe dividends, and the capital gains are also taxed in a certain manner, which we'll discuss in detail, absolutely threadbare in that part of the presentation. While we invest into the mutual fund through say investing through the mutual fund route into the foreign markets, then we are governed just by the simple Indian Income Tax Act, and there is no problem. So tax is not something which is something which we need to fear a lot about when we are investing into foreign markets. Now we have looked at length as to why we should be investing into foreign markets. But now when we are rather clear, or we are rather sold to the idea of investing into foreign equity in foreign markets, then what happens is that now we need to close in, we need to decide as to how do we go ahead. There, to invest in foreign markets, is it appropriate to invest in US market? Right? So for that, we try to look at this aspect in detail. When it comes to the US stock market is 44.3% of the total global equity value. So across all the stock markets in the world, the market capitalization, the market value of the US market is 44.3%, and the balance is the entire world. So in US is a dominant market, and when we want to participate into foreign markets, if we participate in US market, that itself would give us a quite a broad, big exposure into foreign markets. Then we look at some other parameter. Where would somebody like to invest, right? Which is a simple thing, that I would like to invest into the most admired companies of the world. Now, Fortune survey says that the world's most 100 admired companies, the survey is of 2020, it says that out of the 100 most admired companies of the world, 81 were from US, and balance all, as you can see in the slide, are from other countries. So when I participate in the US market, practically I am participating in some of the most admired companies of the world. Then, as far as all of us are concerned, the kind of social connect that we have, the product usage information that we have, is something very special when it comes to United States of America. We all have, I would say all have, a lot of social connect. People going, coming, we have a good deal of understanding about United States. Then we have a good deal of product usage information. We know Apple, we know Google, we know Amazon. And we day in, day out know we use so many things which are US made. Then one of the currency, foreign currency, which suits us or suits the world the most, or the currency which is being respected or which is being honored as a means of payment anywhere in the world, is definitely the US dollar. So any investment for any global investor, if it is US dollar denominated, it gives them a lot of comfort. Hence, what we would feel is that investment in foreign markets can definitely be carried out by investment in US markets. The word mother market, or the phrase mother market, has been used for the reason that every day in the morning when we get up, in order to understand, in order to figure out that what would be the trend of the Indian market, we look at how did the S&P 500 and the Nasdaq closed yesterday night in the US. So that is the market which we call, and that's the reason why we call that market as a mother market. So when we are planning to invest into foreign markets, if we invest into this mother market, it makes good sense. Then the question comes up is that how can I invest in US markets, right? Then when somebody wants to invest into US markets, what we have put in this presentation is that there are three different choices through which somebody can invest into the US market. We look at the option number one. Option number one is investing through direct stocks and stock portfolios. So where we would be investing into stocks and structured, created portfolios, and that is the option number one. When it comes to investing into US stocks, you have a choice of investing into a defined universe of stocks. The reason why I'm saying is the defined universe of stocks is that is something our partner in foreign equity investment, Vested Finance Incorporated USA, offers. But it is a wide big menu of stocks which are in the investable universe, and practically all the stocks which somebody might think of investing in US are covered in that menu. So as far as investment into US stocks are concerned, we offer it, our company offers it through our foreign equity investment partner, Vested Finance Incorporated in the USA. Then another option, say if there is somebody who would say that I really don't know which are the stocks in which I should be investing into. And that is something which is very practical and understandable. Because we might know so many companies which are in US in terms of its product, in terms of the way they operate and so many other things. But we are not good at tracking its stock prices because we have never looked at it since years together, nor we know about the valuations of those stocks. So in that case, what can I do or how can I go ahead? For that, we have come up with a solution that you can invest into structured, customized stock portfolios. So under the structured, customized stock portfolios, what happens is that there is a defined portfolio of different stocks with different weights. Then there is a dynamic rebalancing which takes place from time to time. Then if somebody is very bullish on certain themes of investment, one can select a customized portfolio which is into investing into certain themes. Then another advantage of getting into the structured customized stock portfolio is that one can invest also in an STP mechanism. How, I will explain in detail, but we can definitely invest through the STP route. By that, what I mean is that we need not take a big exposure straight away. What we can do is that we can keep those funds the way we do in a systematic transfer plan when we go for investments through the mutual fund route, that we keep that money into a liquid fund or a short-term debt fund and periodically transfer certain small amounts or bigger amounts from debt or short-term debt or liquid to the equity-based investments. So that is something which can be done while investing into structured customized stock portfolios also. An SIP route, the way it operates in India is not something which is convenient because transferring funds from India every month is an expensive affair. What we can do is that we can transfer a lump sum of money in the investment portfolio or the investment account outside of India into the account which we would be opening for investments, keep it in a liquid kind of a fund where in US it gives a very nominal return, but from there you can transfer small amounts or big amounts as per your comfort to those equity structured portfolios. The benchmark which is followed when it comes to these structured customized stock portfolios is S&P 500. Then I'm just trying to put forward the different kinds of structured customized stock portfolios which I would like to introduce to you. The first one is FANG MT. FANG we know, we have been hearing, we have been reading a lot, which is Facebook, Amazon, Netflix and Google. The company which runs Google is Alphabet. So that is FANG, and on the top of it there is a combination of Microsoft Corporation and Tesla. So if you say that I want to invest a certain amount of money to this structured customized portfolio, then this allocation, when we say that we want to invest into this FANG MT portfolio, it would be in this percentage, these weights which have been mentioned against it. These are the returns which these portfolios, the different individual stocks have offered. The returns are very fantastic, which somebody can read it right away. There are returns of Tesla in 1 year of 544%, is mind-blowing. Coming in times coming forward, these might not be the returns. So these are no assurances of investing, or these are no the big things which I would say when you invest. But the fact remains that these companies are technological leaders, and COVID or non-COVID, these are the companies which do or which are doing quite well even in all the times, and all of us practically are their customers. Then the next structured customized portfolio that is on our offering, or that is one which I would like to introduce, is a moat. This portfolio is a combination of companies which have a very strong business barriers, and they are leaders in their own field, and they have a very leading market share in those respective fields. So these are the companies which we have named, and against that the percentage of holding when it comes to investment into that structured customized portfolio. This is the further list of the same structured customized portfolio. These are the returns which this moat portfolio has delivered, or the simulation of the returns of the portfolio which I have just displayed before you. This is the 1 month return, 3 month return, 1 year return, and the 5 year return. Then one more structured customized stock portfolio which is available for investment is SaaS, software as a service. There also the investment is into promising software companies of the US. The companies have been mentioned, and against that are the holding percentages which would be the extent of investment when one would opt for the SaaS portfolio. These are the further companies which would be a part of the SaaS portfolio. And this is the kind of return that the portfolio has offered in last 1 month, 3 months, and maybe even the simulation of 1 year and 5 years. So to just give you a rewind of what I have talked, when somebody wants to invest into US stocks, there are two options. One is you can invest into stocks of your choice through our partners in USA on the platform, which I'll be detailing as to how we can go ahead, what are the costs and everything. So that is one option. And if somebody says that I don't understand the US markets and I will fall back and rely on the portfolios which are advised by Vested Finance and the kinds of stocks and kinds of companies which are as a part of the structured portfolio, then one can opt for that option as well. Now, if somebody is planning to invest into the US stocks, the investment horizon should be at least somewhere 3 years plus, and ideally 5 years plus, because only then you will be able to get a decent return. This is true for all the equity based investments, whether in India or in US. And on the top of this, what is important is that there is a transaction cost while we transfer funds from India to the US for investment. So if we are investing for a shorter period of time, we incur a higher transaction cost of back and forth sending the money, and it might reduce the returns. So the ideal time frame has to be at least 5 years and above, and this is the way one can look at investment into US stocks. This does not mean that you have to stay invested into a particular stock or particular stock portfolio for 5 years. What I can do is that I can transfer my money to US, keep it in a liquid fund, then I can transfer into stocks, If for some reason I am not comfortable at that particular time, I move out of the market and keep that money once again into liquid fund, that is okay. But if I bring that money back to India, then there are costs which are associated to it. So if I keep my money in US from the equity investments or the ETFs and to the liquid fund and back and forth, then it is not an expensive affair. But when as I said, if you take that funds back to India, then those banking and the relevant costs trigger. Then the next option is investing through the exchange traded funds, which are the ETFs. When it comes to investing through ETFs, here also this investment through in ETFs we are offering through our foreign equity investments partner, Vested Finance Incorporated USA. And if we are planning to invest into these ETFs, the kind of choices which are available in US are very huge. There are so many funds which are operating like an ETF, which are specialty funds of technology, which are specialty funds of a particular sector, then of particular countries, and on the top of it there are ETFs of metals. So when it comes to investing into gold into a paper mode, I can definitely invest into gold in India through an ETF route by investing into ETF of gold in India. But insofar as investing in paper mode, without taking a physical delivery or transacting physically, by incurring costs of holding it or maybe a GST or something, and if I want to invest in silver, I can invest into a silver ETF in USA out of the funds which I have transferred. So I can, for some time, I can be into direct stocks, into some portfolios, then into liquid, then into silver. Whatever I want to do, it can be done from the same platform. The kinds of returns which silver has offered, returns as on 14/8/2020 we have mentioned, these are the returns on silver. So basically it's an investment in silver through paper mode. Then if somebody is planning to invest into platinum or maybe some other metals as well, here we for the sake of illustration we have mentioned two metals which for which there aren't ETFs available in India, which is basically silver and it is platinum. So in both these cases, through the ETF route, one can make investments into those metals. Here also the investment horizon has to be at least 5 to 10 years while we are investing into these kinds of ETFs, because there are different cycles which happen. And here also the same reasoning applies, that if you are moving within different investments in US account which we are talking of, then it is okay. But if we are moving out the money from US to India and back and forth, then it becomes a costly affair. Now we look at as to what is the process of investment in the US market, and especially through the route of Vested Incorporated. There are 3 simple steps. When somebody is planning to invest through our platform, then the minimum investment is something which makes sense is rupees 1 lakh. And the first step is simple KYC procedure, which is true when we open or try to do any financial transactions in India also. Then the second step is transfer of funds, where we would be linking a bank account for transferring of funds online or offline through an online or an offline mode. When it is a case of a resident Indian, then the remittances has to be from the Indian bank account under the liberalized remittance scheme. As far as the regulatory part is concerned, there is the subsequent part of the presentation gives complete detail as to what are the regulations which are involved. When it comes to non-residents, non-residents can also invest in the investment options which I have detailed out, and though the non-residents can connect or rather link their international bank account, the NRE account or an NRO account, then the purchase of the purchase of the particular stock or particular structured portfolio is something which we need to place an order, and that is the final thing. So first is KYC, then it is the transfer of funds. The moment the funds reach there, then those funds we need to make a purchase of. Maybe we can keep it in the liquid fund, we can transfer it into a structured portfolio which we discussed, buy some stocks, buy some ETF, whatever we want to do. And this is the way the entire process operates, that investors of Ashutosh Financial Services Private Limited, they are advised by a vested investment advisor, which is a Securities and Exchange Commission, which is the SEBI of USA, which is the regulator, the financial market regulator of USA registered entity. They are registered financial advisors in USA, and the broker for this registered financial advisor is Drive Wealth, and their custodian is Citibank. So through this process, the entire ecosystem works while we invest into the US. Then for simple and seamless online process of investing, you can visit our website with ashutoshfinserv.com, which has got the foreign equity banner, and the website which is specific, or the link which is specific to these investments, which is ashutoshfinserv.vested.co.in. These two things would be operational in the next week. In the meantime, to start other processes or discuss out things, one can definitely be in touch with us through phone, WhatsApp, email, and I will be detailing the persons and the numbers, the telephone numbers and the email IDs where somebody can communicate. So by the time this entire website and this entire thing is operational, in the meantime, one can be in touch with us and sort out the KYC and other issues. To summarize, there is a paperless onboarding, then there is a remittance of funds, then there is an access of the investment platform. You can buy securities in the pre-built portfolios. We will be helping out you on taxes, and at the time of withdrawal also we'll be helping you out. And so this is the entire process, to summarize, which I have been talking in detail. So this is just a snapshot of the website or the link through which one can operate, where there are different tabs through which one can carry out the transactions of investing, looking at the portfolio, evaluating it, adding up things, transferring the funds, and so many other things which can be done in an absolutely user-friendly manner. Then comes the aspect as to what are the costs of investment in US markets. There are quite a few misconceptions about very high cost of investments in US markets. The cost of investments in US markets through the route which we have been discussing, either to buy the US stocks, US customized portfolios or ETFs, is something which I would be providing you in the details of. The first cost is the banking cost. When you transfer the funds, there is a cost which is involved, where the bank charges a fee ranging from 1,000 rupees to 3,000 rupees, and that is the charge of the bank for transferring the funds under the liberalized remittance scheme. So that is the charge which varies from bank to bank. For the ICICI Bank, it is just 1,100 something. For some other banks, it might be 3,000. For some others, it might be 1,500. Then the another effective cost which happens for somebody who is transferring fund is the difference between the buying and selling rates. When you buy US dollars, when you are sending the funds, it is above the rate which we normally see. So if US dollar is say 75 around, they would be, then I have to buy dollars to send abroad, is say 76.48. When I am receiving the money, I am selling dollars. I receive the dollars from abroad and I am selling it off. So there the rate is say 72.78. These are just for illustrative purposes, and this buying and selling rates depend upon bank to bank and the kind of negotiation and the kind of relationship which somebody would have. Then the third cost, insofar as banking cost is concerned, is that there is a GST on the currency conversion. So there is a small GST which is charged on the amount of currency which is converted. Then these are the charges by Vested Finance Incorporated. So the first and foremost thing, there are no account opening charges. There is no brokerage on any transactions. I repeat, there is no brokerage on any transactions. On the top of it, there is a welcome bonus of $15 on the first fund which is transferred. For the first time, when you transfer the fund, there is a welcome bonus of 15%. Yes, the cost is the fixed fund management fee of 0.0833% per month on the entire portfolio value. So when you transfer the funds from India, whatever you do, you buy stocks, you buy ETFs, you keep it in liquid funds, or whatever you do, there is a cost of 83 rupees on a portfolio value of 1 lakh on a monthly basis. So that is the total fees which is charged. Then one more cost is the conversion cost of US dollars 11 per conversion. So while I'm investing, while I'm staying invested, there is no cost. But when I redeem, if I redeem say $10,000, it is $11. If I redeem $1,000, even it is $11. So, but if I stay invested for say 3 years, 5 years, and then in one go I divest my money and divest my investment and bring to India, then the cost of $11 is per conversion, per transaction. So smaller transactions, frequent transactions are something which are not in our interest. So this is a chart which shows as to what is the, or rather the cost sheet of what is the amount of costs which are involved when somebody is planning to invest say 5 lakhs of rupees. There is assumed cost of say 2,000 rupees because the range of these fees range from say 1,000 to 3,000. So we have assumed 2,000, then there is a GST on it, there is a GST on conversion, then the fees of Vested Incorporated. These are the calculations of the first month. Then we have got those bonuses and the net cost is 2,200. On a portfolio of 5 lakhs, the first month cost is 2,200, and for subsequent every month on a portfolio of 5 lakhs, the cost is going to be 417 rupees till the time we stay invested. When we convert the money back or bring back the money after whatever time which we think of, then every conversion, small or big, would entail $11. So if I'm reconverting back my entire 5 lakhs, then there will be just an additional cost of $11. Then the third option for somebody who might find these things as too little complicated is investing through mutual funds in India. So I'm investing basically into the US stock market, but I'm investing through mutual funds in India. So there we are trying to bring forward a few schemes wherein you can make investments into US equity markets. The first being US Blue Chip Equity Fund from ICICI Prudential. There one can make investment as small as say 5,000 rupees and an additional investment of 1,000 rupees. The benchmark is S&P 500, the expense ratio, the exit load, and everything has been mentioned. There it is an investment into US blue chip equities, and the S&P 500 is their benchmark. These are the kinds of returns which it has delivered. So anybody who is looking at Indian markets would find these returns as quite reasonable and quite attractive when it comes to investing into these funds. Then this is a very interesting fund. This is a fund which is the DSP World Gold Fund, which is managed by BlackRock in USA, and the investment in this fund would be into mining companies which are located across the globe, mining companies of gold. So they would be investing into gold mining companies. And the kind of returns which this fund has offered in last 1 year are just huge. And vis-a-vis the comparison of the returns against the domestic prices of gold, also this against that as well, the fund has performed phenomenally well. In say 1 year, the return has been 70%. Domestic price of gold has increased by 48.19%. Obviously, this is not something where I would be suggestive that this is the way it is going to happen in future. But the fact remains that if somebody is investing into gold mining companies, it seems to be an interesting way of investing. Then this is another route or another option within the mutual fund basket of investing into US equity. These investments are predominantly into the smaller companies of USA. The benchmark here is Russell 3000, and they predominantly invest into companies which are smaller in size, which are in our Indian parlance basically small cap kind of companies. The return which these funds have offered has also been interesting and attractive in recent times. Then this is a fund which is basically investing into NASDAQ 100 ETFs. So this is an investment into the benchmark of NASDAQ 100, wherein whatever the way the NASDAQ performs is the way my return would be directly connected to it. And so this is not an active investing, this is a passive investing. But as I said in the earlier part of my presentation, in US, these passive investing patterns have also delivered similar kind of returns over a period of longer time when you compare it with these active ways of investing into stocks and actively managed funds or active portfolios. These are the kinds of returns which this NASDAQ 100 fund has offered. The fund is very recent, so the 3-year and 5-year returns are not available, but the NASDAQ 100 returns have been mentioned, so that gives us an indication because this is just ETF which invests into the benchmark. Then the another option is S&P 500 index fund, where it invests into 500 top stocks of US, which is the standard benchmark when you compare returns of the US market. And there also one can make investments, and this fund offers opportunity to invest into those 500 companies with even small amounts. These are the kinds of returns which it has offered in the recent times. This is also a recent fund, but the S&P 500, the kind of returns which has offered, it has offered in 5 years, 3 years, 1 year on a compounded annual growth rate basis are quite attractive. The investment horizon in these kinds of funds, the way we invest into Indian equities has to be at least 3 to 5 years. Ideal time frame would be investing for a period of 5 years plus. There are no transaction costs which are associated while investing into those US-based funds, because they are covered in the expense ratios which we have mentioned in those respective slides. Now we look at the regulatory aspects of investment in foreign markets. So as far as the regulatory aspects are concerned, there are different regulations for residents and for non-residents. As far as residents are concerned and they are investing into direct stocks, stock portfolios or ETFs, the transfer of funds is perfectly legal. You can do it, and this is governed by the liberalized remittance scheme. We have mentioned the master direction of the Reserve Bank of India, by which you are governed and you can invest up to 250,000 US dollars per person per year. So it is per year limit, around 2 crores of rupees per person per year. You can make investments, you can transfer funds out of India. That is a consolidated limit of 2,50,000 US dollars. There is just a banking formality that we need to do while transferring the funds, and we need not take any specific approval from anybody. The times are gone where thinking of investing outside of India was something which was absolutely impossible. I have seen those times where there was Foreign Exchange Regulation Act, where somebody, if they want a few dollars or make some kind of an activity or some kind of a transaction outside of India, it would be a violation of the Foreign Exchange Regulation Act, which was as prevalent at that point of time. Today, the things are quite simple. Under the LRS, you can definitely make an investment of this big an amount per person per year. Then, as far as non-resident Indians are concerned, they can invest into direct stocks, stock portfolios, ETFs, or mutual funds from their NRE account, or if they want to transfer fund from their NRO account, then even in that case, to the extent of 1 million US dollars per person per year can be invested out of the NRO accounts straight away by carrying out certain formalities. So those funds can be straight away from the NRO account can be invested into these different options. They can definitely invest into Indian mutual funds, and they can link their NRO or NRE account for investment into foreign equities. Then even non-residents, not of Indian origin. So if that person is not of Indian origin, even they can invest into this direct stocks, direct portfolios and ETFs, which we are offering through our partner Vested Incorporated. And there they need to link their international bank account, and they can carry out the transactions and make those investments. Now we look at the tax aspects of investments in foreign markets. So for a resident Indian, when he is investing into direct stocks or stock portfolios, the short-term capital gain period is 24 months. Then he would be taxed at the slab rate. For long-term capital gains, which is holding period is beyond 2 years, beyond 24 months. Indian equities listed, it is 12 months. This foreign equities, it is 24 months. Other assets, which are land and those kinds of assets, maybe gold or some other assets, it is 3 years, 36 months. So this is what is the difference. The short term, long term is the breaking point is 24 months. We would be taxed at 20% long term with indexation. When it comes to dividends, we would be taxed at slab rates in India. But as far as USA is concerned, USA does not tax non-US tax residents. So I am a non-US tax resident when I make my investment in US. They don't tax the capital gains at all, and my dividends would be taxed at 25% because there is a double taxation avoidance agreement between India and US. So when I'm paying my taxes in India in respect of those dividends, then I will get a set off of this 25%, which has been the tax which I have paid in US already. One more requirement which everybody should keep in mind is that when somebody is investing into any foreign assets, maybe stocks, stock portfolios, anything, then the return of income in India for all the people who are resident and ordinarily resident, I am a resident and an ordinarily resident. So if I make an investment outside of India, then I need to give all these details while submitting my return in India. So that is a requirement of disclosure of foreign assets for all the people who are resident and ordinarily resident in India. Then for resident Indians, when they are investing into mutual funds or ETFs in India, they are the third option. I'm talking the taxation in respect of the third option, which is investment into mutual funds. There, the short-term capital gain, long-term capital gain limit is 36 months. Beyond 36 months, it is long-term with 20% with indexation. The dividend will be taxed at slab rate. No tax in USA, since that is something which is I am going to receive, or my investment would be connected in India only. So I am not supposed to, I am not directly involved into any transaction in US, because the fund, the Indian mutual funds, invest on my behalf outside of India. Then as far as non-residents are concerned, so this is very important. As far as non-residents are concerned, and when they invest into any direct stocks or stock portfolios or ETFs in India through this route which we discussed at detail, then they would be taxed in their country of residence, and as far as US is concerned, they would not be taxing on the long-term capital gains, or rather the capital gains for the matter, completely, and they would be taxing only the dividend part. If there is a double taxation avoidance agreement between the country in which they are tax residents and USA, then they would be taxed in respect of the dividends accordingly. As far as the taxation of the non-resident in respect of the direct stocks, stock portfolios or ETFs in India is concerned, because that income of those stock portfolios do not accrue, arise or received in India. It is neither accrued nor arises or not received in India. That entire income for non-residents is not liable to tax in India. So all the taxes that they have to pay is whatever are the taxes in respect of dividends which have been deducted in USA. In India, even if it is through the NRE account or funds have been transferred from the NRO account, there is no tax liability in our view. We have cited the various decisions of the various judicial authorities, and that's the reason why we hold this view that those incomes would not be liable to tax in India. Then as far as non-resident Indians are concerned, when they are investing into mutual funds in India, then it would be short-term, long-term is that 36 months, and they would be taxed at the rate, slab rate when it is short-term. When it is long-term, they would be taxed at 10% without indexation benefit. So that is the difference between resident and non-residents. Then dividend would be taxed at the slab rate, and no tax in USA as such for somebody who is investing through India, because they are not investing directly into USA. Now I come to the last part of my presentation, which is what are the advantages of investing in foreign markets through us, that is through Ashutosh Financial Services Private Limited. The first and foremost is that we understand and we give a combination of investing into Indian investments and foreign investments at the same place. So we understand and we can offer and provide services in respect of both Indian investments and foreign investments. Then we offer all the different routes, may it be buying foreign stocks, foreign portfolios, ETFs, and even foreign mutual funds which operate from India. We are equipped to advise all of our clients on the regulatory aspects of investing into foreign stock portfolios. We give a very important service is that we give a comprehensive data, or we would give a comprehensive data for tax compliance of all the foreign stock portfolios which have been made through us by our clients and all those people who have invested through us. And on the next slide, I'll be sharing as to what is the kind of comprehensive data that we will be providing every year, which is very important for somebody for tax compliance. And we feel that we have a versatile understanding of the various options which are available for investments in India, and as we discussed, quite a wide range of it globally. So this is the comprehensive data for tax compliance which we would be providing to the client, wherein we would be talking about the incomes by way of dividends, by way of capital gains, then the schedule of disclosure of foreign assets, and that too in the formatized manner which is required while filing the US tax returns. So this is something which is very important when somebody is planning to invest outside of India. So in my last slide, which is in my view something which is the crux of everything, is that, and which is my message to all the investors, that the way our consumption has evolved 10 years back, 15 years back, the kind of the consumption that we were carrying out, and today the kind of consumption that we are carrying out is quite different. So our portfolios need to be in line, in tune with those global evolving trends, and we need to look beyond the Indian borders, the Indian way of investing, the Indian universe of investing, and become a global investor. A very well-known, acclaimed global investor and advisor has said that you must avoid single country, single currency, and single asset risks at all costs. So this is the way the investor of the present and the future times has to think and has to act. I sincerely thank all the enthusiastic participants who have participated on this kind of a topic which is quite different, and this is something which is upcoming and where somebody is taking such a good interest. We thank our foreign equity investment partner, Vested Finance Incorporated, USA. I would take this opportunity to thank our research and analysis department of Ashutosh Investment Services, our income tax and estate planning division, and JS Kothari and Company Chartered Accountants, and the entire team of Ashutosh Financial Services Private Limited for making this entire thing operative and happen. People think of investing outside of India, but then ultimately to see that it is really happening and it is really possible and it is seamless is something which is quite important, and this has been made possible. These are the contact details of the persons from whom you can get further information, clarifications and discussion. Obviously we'll have a question answer session, but then these are the persons from whom you can be in touch on a sustained basis. You can maybe take a photographic click if you require. So that's the reason why I'm holding on this slide, and be in touch with us and clarify certain things which remain not clarified as of now. Then this is my disclaimer that whatever I have been saying in this presentation are my personal views, and We are not giving any professional or any investment advice. Our endeavor is to introduce you to these financial products and be a service provider. And wherever we have provided some data, we have tried to provide the sources from which we have taken up this data. Thank you very much, and we'll take up the questions, and thank you very much. Wait for a while, we'll take up the questions.
We hope that you had an enriching learning experience. Let us start with the question and answer session. Going with the first question, we had certain questions on the regulatory and taxation side, but I think that those are already covered, and the viewers can also have a view at the video again to get better clarification on the same. What are the investment options that you would recommend for a non-resident Indian particularly?
Non-resident Indians, obviously, they can invest into the country in which they are located, obviously. But they can also look at investing into the US markets, wherever they are located, except people who are outside of USA. What I have heard, and when I have discussed this matter with quite a few of my clients and the people who are stationed abroad, the option which they have is that they can invest in stocks. Their banks, they provide a platform wherein you can invest in those stocks. But when it comes to actually investing into certain portfolios, that option is not available. So if somebody wants to create a portfolio, they want to invest into US stocks in a reasoned manner, then they can definitely opt for those structured customized portfolio, which makes a great sense for them.
Right. Then we have an interesting question as to what do you think would be the exit plan to redeem the investments from the US markets? What are the possible red flags that can be foreseen to exit out of the US market?
The exit plan as far as country like US is concerned is not something which is worrisome. See, if I am investing in a third world country, then I have to think that what would happen to my money when I am trying to withdraw that money. Across the world, people have been investing into US. There are companies across the globe which are listed on US. So US is a very open, strong economy. So exit plan is the plan where whenever I think that I have attained my investment objective, that is the time when I might think of my divestment. So as far as the exit plan is concerned, as I said, back and forth is going to be expensive. I make a structured investment, a structured call on US, transfer the funds, move from, as I said, from stocks to liquid funds to ETFs, or put money into liquid, whatever I want to do. But then it has to be in US for a good period of time. And then whenever we see that my objective is attained, or for some reason I need my money, then definitely I can exit.
Right. Since we have got US elections which are coming up in November, so what do you think is the right time to invest? Is it before the elections or after the elections?
It might be a difficult call for anybody to take as to when to invest in the US market, or when to make a position in the US market. For that, the simple thing which somebody can do is that say I transfer 10 lakhs of rupees into the US for investment. Then from the liquid fund, I enter in a calibrated manner. Now, if we look at elections, no elections, or COVID or XYZ, whatever reasons, there are certain companies, certain corporations, which we have seen that even in the worst of the times, they have been doing really good. The statistics which has come up, the sales figures and the profitability and the figures which have come up is that these companies did really well in those times. All these big time companies maybe an Apple or a Microsoft, they did really well because now we are more and more dependent upon those companies. And their market is not just US, but it is across the globe. So US elections and those kinds of things are something which, are something which we can look at now in a little different manner.
Investing on a systematic basis is possible.
Yes,
so
yes.
That can be worked out.
That can be worked out, absolutely right. So that is the way one can have a calibrated entry into the markets.
Then we have got certain specific questions for Vested Finance, who are the partners of this company. And like the questions regarding the promoters of Vested, the company history, and few questions on the credibility of the company as such.
Okay, right. So basically Vested Finance are advisors. The entire broking part is done by Drive Wealth. You can visit the website of Securities Exchange Commission of USA and figure out that these people are people who are registered. Then their brokers are Drive Wealth, and these portfolios which one would be investing into can be counter-checked on the website of Drive Wealth also, that these are the holdings which I am having in my brokerage account. Then there is an insurance of 500,000 US dollars when it comes to anything, say for any investor who is invested into the US, and their custodians are the Citibank.
Okay.
You know, so these are the kinds of the comforts which somebody can look at or somebody can derive at.
Okay.
And Vested has got partners, and they choose partners in a very after deep
due
diligence and homework, and some of the big time players in India, the big outfits, they are their partners.
Right.
We are honored and we are privileged to be one of them, but the other partners are quite huge and big. So there is a combination of all these things which I have said. Plus, there is also a set of due diligence which has been carried out by the other partners as well.
Right. As far as the charges by Ashutosh Financial Services Private Limited are concerned, are there any specific charges which would be payable by the investors directly to the company?
Okay. As far as the charges of to the investors are concerned, all the charges that you need to pay is to pay to Vested Incorporated in USA. We would not be charging anything from any investor who is investing. So all the charges which I have detailed out in my presentation, that is all. We would not be charging, we would get remunerated, or we would be getting fees from Vested Incorporated on the basis of the understandings that we have. But insofar as the investor is concerned, whatever I have said in the presentation discussed are that's all.
All right, yes. For a client who is based in United Kingdom, is it possible to directly transfer funds from UK to US and directly participate in through our platform?
Absolutely, absolutely. I would say that not just non-resident Indians, but even absolute non-residents, who have got nothing insofar as Indian origins are concerned, they can go through this platform of Ashutosh FinServe.vested.co.in, invest, map up or link up their UK account and invest and take our services. So today this is absolutely a global, everything is global, and this can be done absolutely seamlessly.
Correct. So at the current valuations of USA, do you think it is a worthwhile time to invest at the considering the high returns that we saw, which most of the US stocks have delivered in the last few months?
Yes, that is something which comes up in everybody's mind, but that's true for India as well. So still every day people invest money in India, and when it comes to let's look at USA. USA, which are the companies where we would be looking at investing into? Absolutely companies which are global leaders. And these global leaders have grown with, as I said, COVID, non-COVID, whatever is happening, because the world is their market. People have become absolutely, let me use the word, addicted to all these things.
Okay.
And so their growth and their sustainability is something which is given. So now if you want to take a call on these companies and the kind of valuations which we saw, then I think it makes good sense definitely starting an exposure. The moment we get a certain level of conviction, then we can increase our exposure from that liquid fund to those stocks or those portfolios. So I think that should be the approach.
And by delaying the investment with the hope that there would be a correction, we might even miss the bus.
Absolutely, absolutely. And all those people who did not delay really made good returns.
Right. Correct. Then going ahead with the last few questions, someone is asking about the guarantee that about his brokerage account that will be subsequently opened with Vested.
Say the guarantee is something which is, as I said, that there is an insurance of 500,000, that's $5 lakh US dollars
By the US regulator.
By the US regulator.
Okay.
And their depository is the Citibank.
Okay.
So this is what it is as far as the entire process is concerned. So there is nothing like that there is a written guarantee or something. When we deal with our brokers also, we do our due diligence and we work with them. That's the way. Then that has to be the approach.
Yes. So now moving ahead with the last question, what percentage do you think should be allocated to these US market out of the total equity portfolio of some investor?
Okay. Investing as such, we know that we need to diversify it across asset classes. So that depends upon which age, what kind of financials which I am into. So my own particulars or my own dynamics, that will basically govern the kind of equity-based allocations.
Right.
So now out of that equity-based allocations, in earlier times what we were doing is that we were allocating that entire equity pie to Indian equity. So out of that pie, we can definitely, or we should basically look at allocating some portion or start looking at, we can slide, we can definitely do a creeping acquisition or creeping kind of addition to the US equity on the basis of the comfort that we derive over a period of time.
Right. Okay. So in case if there are any further questions, the same can be communicated to the contact details which were shared during the video, during the presentation, and we will be really grateful to resolve the same. We thank you all once again for your kind support and for joining us today in this webinar. If any participant wishes to join again, the repeat session of the topic is scheduled tomorrow at 11 a.m. Indian Standard Time in Gujarati language. We look forward to arrange more such webinars and public presentations to see you again. Thank you so much and have a great day ahead.
And we intend to put this presentation on YouTube, and you can revise, review and revisit this entire presentation if you wish, and you can share it with your friends if you deem fit. Thank you so much. Thank you.